This is the weekly economic and market report for the week ending July 22nd, 2022, and also look forward to the week of July 25th, 2022. So I separate this out into, first of all, sentiment, my personal sentiment, and other sentiment that I follow. The second section, I'll talk about some measures, some economic or market measures that I think are important to bring up this week. And then the third will be just kind of a general commentary, as well as some of the videos I have that I've been working on. So, okay, my personal sentiment right now is short term, I'm 70% bullish, 30% bearish, 0% neutral. I do believe that we have some momentum going here, even though we backed off in the markets today more than I had expected. I was expecting maybe a 1% or 2% fallback, but regardless, not every day is going to be up. That's just the nature of things. But I think there's still some momentum there. Whether it goes, to a wild bear market rally or something beyond that, I don't know yet. But we'll have to maybe look back and see how things turned out. Now, midterm, I've changed from 50-50 because we're starting to get close. If this meld up is going to happen, it'll happen more towards the end of this. Well, could start now, but it could end maybe in December, first, maybe bleed over a little into first or second quarter next year. So I'm starting to get a little bit more bearish because once we hit a top, this is where I see a huge crash. So midterm, I'm 30% bullish, 70% bearish, and then long term, 100% bearish. I think we're going to be in the soup coming up. Now, looking at the investor sentiment report, what basically we have seen. We've seen some lows. We're starting to come off of those. We got some momentum this week. 3 up days. So I'm sure if they had taken it yesterday, the bullish sentiment would probably be above 30%. But as it is, since it was reported on Wednesday, it's 29.6% and 42.2% bearish, 28.2% neutral. And after today, I'm sure it's probably something maybe even, people are pretty gun shy right now. So I would say, it might even be below 29.6%. I'd be a little surprised if they took it today, it would be above 30 as far as the bullish sentiment. So part 2 here is some of the measures that I look at and talk about are the 10-year Treasury, and I've explained in the past that it's kind of a key measure for any lending, whether it's mortgages or credit cards or whatever it is. The 10-year tells you quite a bit. And what you can see here is this week, we started up pretty close to 3%. I think there were some days that were a little bit over 3%. And, if we look back in time, we're now down to 2.75%, 2.6%, 2.76%. But if you look, we've kind of peaked out. We got this trend moving down. It doesn't move down in a straight line. It has most things in the markets. But you see we peaked here at 3.48%. And this is a sign that the economy is failing. As rates go down, the economy is showing weakness, and people are going to treasuries to, stay safe. And my expectation is that by the end of the year, we may even be less than 2%. on the 10-year Treasury. But we'll see how it pans out. But I do believe it will continue to trend down. It's not going to be a straight line, but I believe it will continue to trend down as the economy continues to weaken. GDP. The Atlanta Fed it landed, and I think they report this, I believe, next week. Looked at a minus 1.6%, as I keep noting in each of these reports, that we'll have 2 quarters in a row of minus 1.6%, or at least a negative GDP in the second quarter. I'm not sure what the final number will be, but 2 quarters in a row, technical recession, meaning there is weakness in the economy no matter what the political parties say. The economy is very weak and has been for a long time. We don't manufacture as much anymore. We are consumers and not builders of things and manufacturers of things. So the GDP is reinforcing the fact that our economy is weak. Does this number continue to go down in the third quarter? Probably. And I would expect that it's going to get worse. And so that's where we are with GDP. And I think, like I said, I think they report it next week. The U.S. Dollar index. Now, if you guys watched my milkshake theory videos, you'll know that it got up till last week. Let's see what it's looked like in the last month. Got as high as 108.54, which is really historic. And the milkshake theory, Brent Johnson, he says it could get to 112. It's not going to go again. It won't go up in a straight line. Gets to 112. Could go as high as 120, but I guarantee you, it gets to 112. Wheels are going to be falling off the global economy, and so something will have to happen. The Fed will either have to back off, or they'll have to have another Plaza Accord where they agree to devalue the dollar in some way. We'll see what transpires with this. Maybe it'll go down. My initial expectation was that the U.S. dollar would go down. But it just hasn't played that way. And this mass inflation, we buy stuff with a strong dollar. We don't see it. You see the dollar index go down, and things are going to get more expensive. And I think a lot of the people that I follow are expecting this dollar index to end the year around 80 or 85. Now, different theories. That's why I bring them up. They're much different than Brent Johnson's milkshake theory, so we'll see how it plays out. Regardless, I think the Fed has made a mistake by not raising rates, probably back in 2018 or early, and then after they've had other opportunities to raise rates, they're late to the party. And we've talked about why, which is they're always looking at lagging indicators. And so that's the way, with their mandates and the things that they look at, it's kind of a myopic view of the economy, but they're lawyers. That's all I gotta say. The people that think they know everything, but they don't. The PMI, the Purchasing Managers Index. I saw this in an article today. It's now, as of July, it says it's at 47.5. The PMI is basically, if you're over 50, you're expanding. If you're under 50, you're contracting in manufacturing. So we're starting to see some contraction there. And so what are my expectations? Next week is going to be kind of a pivotal week. Now, I don't know whether the market's going to go up or down after or during the course of next week, but I know it's going to set the table for what's going to happen for the next few weeks. There's talks that the Fed will raise rates 0.75% or 1% as a possibility. I think they backed off that. We've got we know that the Fed is still looking at the last reporting of CPI was 9.1%, and we know that that is an underreported number, underestimated number, that if we went back to the 1970s type of calculations, that we're probably in the upper teens. But, governments has been finding ways to put it to their constituents for a long time in order to get reelected. So that's the kind of the look for next week. There won't be a lot of activity probably on Wednesday until the Fed reports. And then Powell typically speaks in the afternoon on Wednesday, and we'll see what he says. And then I believe they have a pause after this, a rate hike until September. So you won't see anything in August. And a lot of things could happen between then. If they raise a point, 3/4 of a point or 1 point, the federal funds rate, then what that's going to do is create a situation where the milkshake theory could come into play, because we're going to be a place where people can go to get at least a halfway decent interest rate on their money that's safe in the world. A lot of tech companies are reporting next week. That will make a big difference on whether we're beginning to melt up or we're going to see one more leg down. And so we'll be able to determine whether we're going to be back to the bear market or continuation of this bull market that started. So some of the things that are going to be reported next week, we're going to be looking at, just highlight some of these, but consumer confidence, home sales, durable goods orders, University of Michigan consumer sentiment. I'm keyed in on sentiments because it's a psychological game, the markets are, and that's why they're so hard to predict. And again, I'm working on some videos right now on my favorite strategy is selling puts. There's a method. I had a lunch with a friend of mine this week, and we were talking about, if you ever buy a stock, don't buy it outright. There's other ways that you at least should know about, buying a stock. You can sell a put, and when below whatever the current price is and it gets down there, then you can buy it then. That's pretty much it, I guess, for this week, and kind of looking to the week ahead and trying to shorten these. So I'll leave it at that, and remember, there is always a better way.